we're going to be talking about scalping, and we're going to try to explain the different steps to put a scalping strategy together. And of course, when you go out there to the internet and you start reading about what scalping is, it's very common to see comments about being in trades a couple of seconds, or a couple of minutes, or trying to trade off the tick chart, or 1 minute chart, or 5 minute charts. And in essence, scalping, or the way I understand scalping, is very different from that. Okay, scalping is in essence trying to go from a certain key level to the very to the closest key level available. Okay, so if you're buying, you want to get into a certain key level, or pivot point, or support, or whatever it is, and to get out at the very next available key level. Okay, so that's the essence of scalping. Now, this same principle, you can use it on every time frame. Okay, you could be aiming to go from key level to the next available key level on the daily charts, and you would be performing scalping just on a long term. Or you can try to do that on the 1 minute chart, which is what you see me doing usually during the training rooms. So I will present you the way I trade on an organized way, to go from the daily charts and understanding the bias and what we're trying to accomplish on certain training session, all the way to lower time frames, which are the ones I use to executing. But just take into account that you could apply these same principles on every time frame. Okay, if you're not suited, and I know a lot of people who struggle a lot doing a lot of trades and trading off the 1 minute charts, for example. So they wanna you can always try to use these same principles and trade and use it, let's say, on the hourly chart. Okay, and then as long as you're trading from a certain key level, you're getting in that key level, and then getting out at the next available key level, you're performing scalping. Okay, and then swing trading would be when you're holding your trades over different and multiple key levels. Then you're swinging across multiple key levels. So what we're gonna do here, let me go through the presentation. Okay. Wait. There you go. First, to go through the 4 pillars of every scalping strategy, okay? Which is, number 1, understanding the bias. The bias will give you direction. And usually we're gonna try to get these biases from larger time frames. So in my case, I do this from the daily charts, but you could do this from the monthlies or weeklies if your execution is going to be on higher time frames than the 1 minute chart. But for myself, I do my bias, or I get my bias on the daily charts. From my bias, I want to understand, the big picture. Where am I on the higher time frames? Am I at a key resistance, key support? What's more likely on an expansionary phase on the dailies? That will give me more likely to understand the market context and to understand what I need to look for on the daily charts. So my bias will give me like the direction if I want to overall try to go long or short or neutral. So I'll do that from the bias. Okay, I'll get into more details to that. Then I want to go to lower time frames to get my levels. Usually I do that on the hourly time frames. I want to mark up my key levels. Okay, where are these key demand areas or key support levels? Because around those levels is where I want to be more active, and that's where I'm expecting the market to go from one key level to another key level. So I mark those key levels, key demand areas, support areas, supply levels, resistance levels on the hourlies. Okay, those are my key levels. Then I look for a setup. Usually my setup, I try to get it from the 5 minute chart or the 1 minute chart, which is usually, the different signals you want to get, okay, from these lower time frames. Might be a breakout or a retest, or a breakout and retest. A contraction. There's different setups we can get from. Okay, if you're using indicators, so that might be your signal. Okay, your indicator setup from your indicators on the 5 minute chart, and then the execution and the management, which I do usually on the 1 minute chart. But it's essentially understanding where or how are you exactly getting into the trade, where's your stop loss, where's your take profit, what you do in between, that's execution and management. So I want to go um, through the slides, and then I'll open up a trading chart and I'll do this exercise with live markets. Okay, so let's go over here. So we spoke about the bias. Okay, the bias, I wanna do it on larger time frames. I do it from the daily charts. And basically, what you want to understand, if the overall large money is on a bullish trend, on a bearish trend, or in a neutral market. Okay, and you wanna ideally try to align your execution and your setup to this larger bias. Okay, so if you're in a long trend, in a bullish market on the dailies, ideally your setup on the 5-minute chart, you want to get let's say a bullish breakout. Okay, so something aligned with the bias, the overall bias. Same for bearish. A neutral will give you, I'll give you an example, but if you get a neutral bias, if you see the charts on the dailies going sideways, so you have the opportunity to do both long and short opportunities. So from the bias, you're also going to get like the market context. Okay, you will understand if the market is going sideways, and then from sideways or ranging markets, you can try to get more fake outs, more failed breakouts, more bounces from support and resistance, counter trend trends. And on trending markets, if you see a clear bull trend or bearish trend on the daily charts, then you want to align yourself to breakout continuations, pullbacks and continuations, momentum trading, breakout and retest and continuation. So that's what you want to do. You want to be able to understand from the daily bias if you're trading on a sideways market or on a trendy market, and then you will adapt your setups and your execution to those contexts. Okay, so this is the important takeaway. I have two examples I'll want to show you on the markets, on the happening as we speak, and we'll be able to do this exercise together. Okay, continue. We go to the hourlies. Okay, I'll go to hours. You can see me doing that on the trading rooms every Wednesday, and we want to mark the key levels. Now, what are these key levels? A lot of people understand the key levels are support or resistance. Myself, I speak of on terminology of supply and demand, but you could be order blocks. And basically, the key levels is where important impulses, important movements were initiated in the market. Okay, so many times you recognize it, and it's very easy to spot them after news, after high impact news, because you get the high impact news, and you see a very large candle, for example. So those areas, those levels where important movements were initiated in the market, those are our key levels. And usually the market will move from these key levels to key levels. So let me give you an example here. We have this chart, for example. And on this chart, we can see we had a consolidation period, and then we had a gap to the downside. Okay, this was a couple of years ago. We had some news or over the weekend trading or something like that, and there was a big drop, and we opened the market with a gap. Okay, now that gap, okay, for that to happen, there's behind the scenes, there's billions of dollars being pushed to the market, or any currency being pushed to the market, and the market will tend to retest these areas. And when the market retests these areas, there's usually a reaction of that area, okay, from that level. So in this example, for example, this on the hourly chart, this is my key level, okay. So I'll wait for price to come back from that key level to that key level, and then I'll decide what I do. So on the hourlies, consolidation, I see, for example, a gap, could be a news train, whatever it is, that where this important movement was initiated, that is for me the key level. So I mark it on the chart, okay? And then I wait. Let's move on. Now the setup. And the setup is what sometimes on real time is hard to explain, but the setup is kind of the signal you're waiting for, okay? So the setup can be a compression channel approaching those key levels we just marked. the setup can be a consolidation. Okay, let's see the price comes back to one of these levels and consolidates inside that key level again. So the breakout of that key level or that consolidation, that can be a setup. If we're picking on a trending market, so a break and retest and then a continuation, that can be a setup. So you know, when you hear if you like chart patterns, for example, okay, the double tops, double bottoms, head and shoulders, all of those are the setups we're looking for. And there's a lot of those, and all of those valid. We just want to to align those to the key levels and to the bias. Okay, so for example, in this trade, in this presentation, the setup is a compression, a channel, retesting the key supply. Okay, so we had the chart, we had the drop, we have marked our key level, and now we have price action, a very weak price action. Okay, if we understand what's going on behind the scenes of this compression, we see there's no strong movement towards the key level. It's a very slow and weak movement towards the key level. So when slow momentum, slow price action retests or revisits a strong selling area, in this case, we anticipate to have a strong reaction. So in this case, the compression channel approaching a key level, that's the setup I'm looking for. Okay, so now I go to execution. Now execution is where and how am I going in. To execute a trade, you can use sell limits, sell stops, market orders, and everything comes down to how much confirmation you're looking for. Because sometimes when you're looking for that confirmation, okay, the confirmation might be a candlestick pattern. Okay, let's say you're looking for engulfing pattern, engulfing candle, bearish engulfing candle when you inside this key area, and after the engulfing candle you go short. Okay, which is valid. But when you're looking for confirmation, you give up on price. Okay, usually the engulfing candle might be a very big candle that gives you more confirmation, more clarity, or more win rate potential, but you're giving up on a very better entry price, which is also always good as long as you understand the difference between getting in with confirmation and without confirmation. Okay, so in your strategy plan, you need to understand when and why, or your preference. Individual preference, if you're going to be getting into the market with confirmation or without confirmation. In each case, you can use pending orders or just getting into the market. If you're available to be in front of the charts, then you can use market orders. If you're not available to be in front of the charts, you might want to go for pending orders. So you just wait for the trigger, or you set an alert, and then you wait. You let price revisit your key area, and then to trigger you in. We want to make sure we know where are we getting out of the trades. The stop loss is you want to place it always above or below the key level. Okay, so in this example, if we're attempting to go short, we'll want to place all our stop losses above the area. Okay, we will see that in a moment. And finally, where are we getting out? Where's our take profit? And remember, because we are scalping now, we want to have our take profits at the very next available key area. Okay, so let's see how that looks. Okay, so we get in around that area. Okay, so if you get in without confirmation, so when the price came to visit the key area, you short, and then you go a little bit into drawdown before you get into profit. Or if you do wait for confirmation, then you might want to go in after a candle or two when you're already in the money, and then you go short. Your stop losses need to be above the key area, okay? Because many times you might have revisits of stop loss and all of that above the areas before having the movement in your favor. And the take profit needs to be at the very next available area. So in this example, we have a strong support here, or demand area here. So for scalping purposes, this needs to be our take profit. If you want to swing, then you can have lower targets. but technically, if you place your stops here and here, then you're swinging the trade, okay? Because we're speaking of scalping, then we want to have our take profits at the very best or closest available area. So if we continue here, okay, we can see what happened afterwards. So we had trigger without confirmation, trigger with confirmation, bit lower here after the candlestick pattern. In any of the cases, we got the price action to our next take profit, and then the market did the things and continue. But by this moment, we don't care anymore about the trade because we already took our profits, and that's the beauty of scalping. When you see me scalping, I keep a very high win rate because I'm constantly putting money into my accounts, constantly taking profits, and then waiting for the next setup available. Okay, so this is the explanation. Now let's go to live markets to practice, okay, or to do the exercise together. Just remember, scalping is it's a technique, okay, or an approach to trading where we want to be looking for entering and exiting from a key level to the very next available key level, okay. Because we're going to be holding our trades relatively shorter period of time, we need to be very disciplined and very patient, and we need to practice this a lot to keep our statistics healthy and in our favor. Now let's see. Let's bring my trading platform. Okay, I think we can see my trading platform. Okay, so I got two examples today. I'm going to start with gold. I know gold is a very popular asset for traders worldwide. So I want to start with gold, and I'm going to start from the daily charts. Okay, so first I have a look. Before anything, I have a look at the market, at the chart. I zoom out a little bit, and I see the overall movement from gold, okay? And you can even zoom out and you can see, okay, we're on all-time highs. So that already gives you like a hint of, okay, this is most likely going to be a bullish bias, okay? In this case, it's very clear. Not always is so clear on the daily charts. If we were, for example, on the same chart, if I was here, okay, in this area, then probably the bias would be neutral, right? Because on the dailies we were back then we were like in a sideways market, but as for now, it looks very, very bullish. Now I want to zoom in a little bit to understand most recent price action, okay? Because we did have a older high, okay? Let's walk that together, okay? We had this movement, this previous high. And that will always create a certain resistance level. So up until that moment, we could say, okay, maybe that's the moment we're going to get a bounce or something like that. So when getting your bias or when you getting your potential next movement on the dailies, you need to take that into account. But then we can see where, as from today, we're breaking through that all-time high, previous all-time high. So that might be establishing a new bias or a new expansionary phase that we want to take advantage of, okay? So I zoom in a little bit, I go to the hourlies, and I want to see how that breakout is looking like, okay? So now I want to remark. Let me get rid of that. I want to define my areas. So I zoom into the hourlies, and I want to mark my key levels. So I got one there, okay, which is the most recent one. So now I already established my bias is bullish. So if I revisit this key area, this key demand or key support, okay, we can see from this point we have the impulse being created, being generated. So when we revisit that area, I want to look for price action or a certain setup to try to go long. So that might be a compression, okay, like in the one in the slide, a very weak price action towards this strong bullish area, or maybe I'm gonna get a strong impulse and then consolidation and then a bullish breakout, or I don't know, a strong impulse and then bounce, retest, and then continuation. So there's different setups, but I want to be aligned to the daily bias, which is currently bullish. Okay. Other than that, I also have another demand area here, and I also have, you know, this bit older one, but it's also in there. So I have multiple demand areas where important movements were initiated. Okay, you can see from these points there was like important bullish movements, and we haven't revisited those areas. So when the market goes back to revisit this area and this area and this area, we expect to have some kind of bounce of these areas. Okay, and that's where we want to be active. So for example, and it's just giving you, you know, a potential scenario. Okay, let's say that, just imagine we consolidate. We're on the hourlies. Okay, we consolidate. We consolidate here. Okay, and now we go back. Okay, and revisit this area. If we go long, if we decide to buy off this area, this would be our very next available area. Okay, on the hourlies. So that would be the scalping. Okay, where we wanna get our targets. So let me get rid of that. Now I want to go back. I want to go to the 5-minute charts, and to make sure and to try to refine even more my channels. Okay, so from the 5-minute chart, I already have a bit more information. Okay, I also have this level right here, and I can now refine also the previous level I mark on the hourlies. A bit better. Okay, something like that. Okay, you can see where's there important bullish candles, important movements created. So now when the market goes back in the future to those areas, we'll try to take advantage of those. Okay, so that's on the 5-minute charts, and the execution I would do it on the 1-minute chart, but now we're not there yet. And I want to bring Euro Yen. I also saw something nice over there. Let me bring it up. Euro Yen. Okay, so we'll do the same. Okay, we start on the dailies, and if we zoom out, we can see also in Euro Yen, we see we're kind of, you know, trading all-time highs. So looks like we want to be on a bullish bias. On bullish bias, remember, we want to then try to get setups to go bullish. If we're trending on the dailies, we want to get continuation patterns and, you know, things related to trending and not counter trending. So I zoom in a little bit on the dailies, then I go to the hourlies and I try to refine my key areas. Okay, let me zoom out. Okay, so I see on the hourlies, I see this area. Okay, I will mark it and then I'll refine it on the 5-minute charts. But you can see we had, from these levels, we had a very strong impulse to the upside. Now we're kind of slowing down, but whenever we go back to revisit these levels, then that's where you want to be active. Now let me go back. Let me go down to the 5-minute charts to try to refine this. Okay, and on the 5-minute charts, I want to refine my levels. Yeah, something like that. Okay, you can see at this point we had the strong impulse to the upside, and since then we just continue to the upside, and we haven't gone back to that level. So that's our key level. Okay, so we got bias, bullish bias. we have a very nice demand area mark now. We don't have any supply areas yet. So now we want to wait on the hourlies, on the 5-minute chart, whatever time frame we want to use to trade. We'll want to wait for the market to go down to this level. And when we go back to that level, we want to make sure we have a setup, okay? Might be a compression, might be a breakout, might be a retest. And when we go back here, we want to make sure we take advantage of that potential bounce to the upside. What can we do? We can either go with that confirmation, then you just, you set a buy limit. Okay, because you never know when is this going to go back to the charts. You don't want to wait. It's far from that level, so it's not even close to the level. So you can set the pending order, or you can set an alert. Okay, you set an alert on your platform. Whenever price reaches that level, you will get a notification. Then you go back to the charts and you see how price came back to that level. Okay, because going to that level and the way it went to that level is similarly important. Okay. Okay, let me get some questions until now. Let me go back to the stream to see the questions. Just flip it down. It's been jumping up like crazy. Gold view. Okay, so gold, we just did gold. How do we know if there's going to be a breakout down to those levels when prices go to those levels in the box? Yeah, so that's a great question. Okay, real time, you never know. Okay, you just need to be prepared for those bounces because price might come to this level and just continue down, right? So first, you want to see how price comes to that level. So, and we said if it comes in a weak way, okay, we know we have already a strong demand area. So if we see the market will come in a channel, okay, let's understand what happened in the channel. Okay, in the channel, we have these small fluctuations up and down. So the supply and demand are being consumed already. Okay, all the little orders are being triggered all across the channel. So when the market reaches a strong area of reaction, there's no resistance or support in order to prevent a good reaction. So you already putting the odds of a strong reaction in your favor. You're aligning with the bias. You have a good demand area where a strong movement in the past was initiated. So at that level, okay, at that price, there was a lot of interest from institutional movement to move the market up. So next time we come to these levels, there might be the same interest of moving up. And then we have the setup, which is the weak channel. Okay, so also in terms of order flow, we have that in our advantage. And the last thing you can do is wait for confirmation. So as we discussed, whenever the market comes to this level, instead of going without confirmation, you wait for a price action reaction, for tails on the bottom, for example, to tell you, okay, there comes the buyers. Okay, there's tails on the bottom. There's pin bars forming. There's engulfing candles forming, or those patterns that will help you understand there's a reaction coming. Please come. Every 2 weeks I'll come to the trading room and I show this live, and then I can show you also the management of trades. But that's the way to have like a clearer image if the market will react or not. And of course, if it doesn't, if it breaks to the downside, then you have your stop losses. So we always set our stop losses below the boxes, right? Okay, let me guys know if there's more questions. Yeah. So as we mentioned, we have we said we always want to have our stop losses below. In this case, is below the box. If that was an opposite trade, it was a shorting signal, then you want to have your stop losses above the signal. So let's have a stop loss set here, and I'll walk you through risk management also a little bit. Okay, so we have a stop loss, and when we have when you already know in advance where your stop loss is going to be placed, okay, now you can measure. Okay, in this trade, I'm going to be risking 67 pips. Now, how heavy I want to go in this trade, right? What's my account size? How much I want to trade? Do I want to risk 0.5%, 1%? I run the numbers, and then I know I need to divide that by 67 pips I'm risking within this trade, okay, or 60 pips I'm going to be risking. So then I know I'm certain I'm not going to be risking more than necessary. Okay, guys, stay tuned. Okay, I'm gonna take some more questions, and stay with us because we're gonna give an important announcement now. Now, Michael's gonna join me again for his strategy. Ends up in overtraining, isn't it? So it's not always the case. I know the opposite, because if you're scalping and you manage to start your session and then to scalp properly and end your session, then there's no need for overtrading, right? Because you set yourself a time limit and a price limit, okay, how much you're going to lose and how long you're going to lose, or so you have your framework and your time work, and then there's no need for overtrading, okay? What is the risk reward for this setup? Okay, so the risk reward is something important, and it's important to know about scalping that you usually have a lot of wins, okay, because you're gonna have very quick reactions to the levels you're trying to aim for, and usually your take profit or your next area is close enough to have multiple wins. But take into account that you might have also the losses, and sometimes the losses are going to be bigger or larger than the wins. So in my case, and I've shared my my stats, in the trading rooms, you're going to have like a break-even risk-reward ratio, but you will be able to manage a very high win rate. Okay, you will have the ability to make multiple wins, so you can keep your 70, 75, even 80% win rate. But when you lose, usually your wins are larger, and you have like a break-even, slightly negative risk-reward ratio. That's important to know and acknowledge, because that's natural for scalping. So don't get too stressed for that. Okay. Okay. I think we're good, guys. So let me welcome back Michael, and he has his presentation. And do stay here because we have very exciting announcement
for you guys
in a moment.
That was great. Oh, thanks so much.
Thank you, Michael.
For that. If let's stop the. Alrighty, stay with me a little bit longer, because right now, guys, we are going to do our first giveaway, and that's actually the Fivers giveaway. We're gonna give 10 accounts of the 10 high stake account, right?
Yep.
And then 20 accounts of the 20K high stake account. So I'm gonna share my screen for a second. You can watch it together with me and Saul, and we can do this, the first giveaway of today. After the giveaway, I'm going to do my presentation, and then Saul and I are going to present to you with our exclusive offer for today, both for Fivers and Traded Pool. So stick around for that. If you guys in the back can bring out the screen, I'll do that. Alrighty, we are good to go. First, First giveaway, the Fiverr side. Here you go, drawing the winners. 10 of you guys that taking on the 10K high stake. Alrighty.
There you go. 10 total winners.
We have 10? Yeah, we got 10 winners. You get in, guys. You will get it within 48 hours. 10K high stake for all of you guys. And we're going to do another giveaway with the 20K high stake for 20 guys right now. So
20 lucky winners.
yeah, let's see that.
So guys, we got these emails recorded.
Yep.
So you will get them by tomorrow.
48 hours.
48 hours. If not, just reach out to support. We'll help you out, guys.
But definitely wait 48. Alrighty. Here are the winners.
We're seeing the winners right now.
Looking good. 20K high stake. Make sure you trade it properly, and you can actually use the strategy you just learned from Saul to do that on currencies or generally on CFDs. Use that. So we got the 20, right? Yeah, we got 20. These are you guys. Hopefully you're in one of those names. Thanks so much, Saul. I'm going to take it from here to my presentation, and then we'll see you
Absolutely
in 30 minutes or so to talk about our special offer for today. Alrighty. Popping up on the screen. And let's do this. Oh, and thanks so much. A quick reminder. So just before going into my presentation, let me do this. I'm going to enter the Fiverr's website. And for those of you who didn't see it yet, on the Fiverr's website, you can see futures soon, a button of futures soon. And this means that on the Fiverr's, we're going to bring the futures to you guys. So basically, funded accounts on futures, all you got to do is just click on it and click on the email here, add your email. It will be basically your early bird access. We're going to send you a few information about what we are planning and the work that we're doing on the future side. It's going to be an incredible one. And if you're familiar with what we do on Tradepool and the Fiverr's, you know that whenever we do something, we bring something different to the industry and changing it and taking it to the next level. This is also something that we're doing right now on the future side. Is yet to be out there. We are currently working on that, but I can promise you it's going to be a game changer on the futures industry. So make sure you sign in the email here. You will also get a survey, and of course, we'll start getting some information about what we are planning and what will be in the future, the near future. One more thing about that, we already have our socials set up for the future side, so you can go and register for them as well, follow, subscribe, and of course our Discord community on the Fiverr's futures. So make sure you follow and stay up to date. It's going to be an incredible programs, and generally everything around it will be very unique and new to the industry of the futures side. So if you trade in futures, or if you want to do that, for sure, check it out. We do have 2 pages, long pages that will prepare you to trade futures in case you're not familiar with that. So if you are trading Forex, we have a full explanation about how to move from Forex to futures, or maybe not necessarily move from Forex, but actually just using it to extend your arsenal of trading, and the same for stocks to futures. So all the nuances, all the stuff that you need to understand about the futures market, we will explain about it and teach you along the way, so it will be an easy shift or an easy expansion of for your trading. So make sure you do that. Go to the Fiverr's website, click on futures soon, leave your email in the early bird access, and you will be up to date with everything that we do. Alrighty. So now let's jump to the presentation that I made. And what I'm about to talk with you about is basically buying the dip. For those of you who've been with me for the last 4 years in Trade a Pool, and maybe even before that, you know I'm a buy the dip trader. I've been trading for 17 years, stocks and futures. And this is by far my main and top strategy that I'm using, buying the dip either intraday on a 1 minute chart or an hourly chart as well for a few days of holding. So in that case, this is my bread and butter. And if Saul mentioned his scalping strategy, mine is the buying the dip. And I added here by 2026 dip because, as you know, we already seen it in the last a good few years, and especially this year, 2025, whenever the market is dropping down, it could be a major drop or a small drop, but at the end of the day, we will see the bounce. And we had it a week ago when the market really, the Nasdaq really dropped nicely. All the tech companies dropped as well. But then once we reach that main liquidity level, we bounced until up until today, basically. So the idea of it will probably remain the same for 2026 as well, meaning whenever we will see a drop, you can of course try to take the short side as well and look for that drop. But in my eyes, it will be smarter move to just buy the dip. But, and that's the main issue when it's come to buy the dip, a lot of the guys at home, a lot of the traders are actually catching a falling knife, right? Instead of that, and instead of going into really charting and the indicators, we need to shift our mind or change our perspective about buying the dip. And that's what I want to talk with you about in the next 20, 30 minutes. And I'll bring up the chat on my side just to see if you have any questions. Feel free to drop them in the chat, so I will see it along the way. But the concept is simply that buying the dip is not really an entry point. It's not about the charting part or the indicators. It's actually about the way you think, right? Once you understand that there is a psychological aspect of trading, and of course we all know that, and a psychological cycle, then we can identify it. And once we identify the right psychological period, then we understand that this is the time to buy the dip. So it doesn't mean that you need to click the mouse here right on the dot. Of course, it's amazing to to catch the tail, right, and really see that you bought the dip, like literally the last low. But in the idea of it, it doesn't really have to be that way. You can easily buy the dip even if you're missing a little bit from it before or after the low that was created. So try to think of it of that way, of thinking when it should be happening or what's going on behind the chart, and only then jump into the chart to really analyze it. Now, of course, buying the dip is a common knowledge, right? A lot of traders heard about it, probably studied it or watched many videos on YouTube talking about how to buy the dip. But at the end of the day, most traders will fail and catch a falling knife at the wrong place and the wrong time. And once you understand that there are phases to buying the dip, then it will be easier for you to jump from the failing side of it to actually understanding, okay, this is the area, the moment I actually need to buy. So let's dive into that. And again, you can easily write your questions below. Feel free in the chat. So 3 types of dips. That's the main thing we need to remember. We have the panic dip, we have the hope, and then we have the expectancy, right? So the panic dip is where fear is real, meaning we see a forced selling, the price is declining rapidly. This is what happened at the beginning of the stage of the dip. But this is also the moment when no one is reactive. A lot of the traders will see a major dip. We will see it in a chart in a second, a major dip. And once they see that, they stop. They're not participating really. They're not buying the dip because they see something is off, right? Major force in selling will cause a stop, like a freeze. What's going on here, right? Second thing will be the hope dip, which is a lot of the times after a major drop, you will see a bounce in the price. But this bounce will be actually sort of like a pullback where traders will go earlier to buy the dip. They will think this is it. But in most cases, that will be too early to jump in. That's their hope. They hoping it will turn from this area. And the last thing will be the expectance dip, which is after the bad news is observed and all the drama, all the chaos is starting to observe or relax, get into that relaxed moment, relaxed stage, then we can start buying the dip truly. And in most cases, we will see the turnover of it. And in a second, I'll show it to you in the chart. So one of the lines that I really love is this one: read the emotional state of the market, because the market is just participating, right? It's a market of us traders all around the world using the same knowledge, the same experience, some more or less, and we're just acting upon it. But if you understand the emotional stage of each one of us, right, then we can understand where should the market move. Because if everyone is in panic, and this is a classic one, you can see it. I'm sure most of you guys been around COVID time. The market dropped rapidly. Everyone got into a panic stage, forced selling like crazy because everyone thinks that the world is about to collapse. And that was the place where another push to the downside, bounce, a little bit of bounce. That was the op dip. And then when we got to that point when the bad news observed, everyone already knows about it and it's not a panic stage, then there was the turnaround on COVID, and you can easily see it in many, many other cases throughout the years. So once you understand the emotional aspect of trading, what's the stage or level that a trader will be in, then you understand what is going to happen in the market. And it's amazing to see it every time. If you shift your mind to that stage, to thinking about emotional and not about necessarily the candle that you see, you will immediately see a different approach in your staging, in your understanding of the market structure. Alrighty, so in order to do that, you have the 3-question buy the dip filter. Before entering a trade, ask yourself this, okay? So it's not about really numbers or where your stop is. It's a logical aspect to it. Who is in pain right now? Who is being forced to sell? That's the first question you want to ask yourself. And of course, the first guys that are willing to sell are those guys either forced to sell because the brokers close their account, margin calls, right? It's mostly on stocks, but generally, or futures. But there is a time where if I'm in a loss, then I need to close the position, or I need to add more money to the account. So forced to sell, that could be something that is automatically generated by the broker. Guys that are seeing the market is dropping down and they bought it just as a minute ago before that, that means that a lot of the guys are in a loss and they're forced to sell. They gotta get rid of their shares or their position because they're in a big loss. Those guys, that could be automated stops, right? Hard stop in the system will trigger the stop losses, which will trigger the forced to sell moment or idea concept. So ask yourself this at first. Then go to the second stage, which is what has already happened that the chart knows. right? Because we have Charles Dow uh, with his theory. So Charles Dow talked about the fact that the chart already showing everything that we as traders or investors needs to know about it, right? So in that case, what already the chart, what happened on the chart, and the chart already know, and of course we're talking about the news. Are the news are already out there? People are aware about the news. Do they understand what's going on? If you're taking again the COVID time, then the price dropped dramatically. A lot of the people are selling even without knowing what's going on. Then the news came out, Corona, the craziness of the world. That's the second drop. And then ask yourself this, because you do need to manage the risk. If I'm wrong, where am I immediately proving wrong? And that will be something that you can use in two ways. One, throughout the news, as I mentioned before, observing the news. So if the news are already out there, you don't want to see the panic. You want to see the calm. You want to see the chaos becoming something more flatter. So not a lot of drama going on. That will tell you that the news is already out there and everyone observing it and understanding what's going on. And then you need to tell yourself the second part will be, because we are traders, we are using main liquidity levels, right? So in that case, we want to look at the chart on a higher time frame. In most cases, depends on the time frame you are trading. For example, if you trade in a 1 minute chart, you will go for the hourly chart, right? You will look for a major level on the hourly chart. That could be also a 4 hour chart. Or for those of you going all the way, you can go up to a daily chart. But in most cases, if you trade in a 1 minute chart, you can definitely stay around the levels of the hourly and the 4 hour chart. If you trade in a higher time frame, for example, if you're executing on an hourly chart, then you can take the levels from the daily and even the weekly chart. So once you understand the concept or the psychological aspect of it, ask yourself, where do I stop loss from it, right? Where do I stop the position and take in the loss? Because, and that's one of the most important things when it comes to trading in general, not even just buying the dip, you want to have the right size for your trade, right? Not going oversized. And second thing, you want to know that you're not going to blow the account, and you got to take the punch, and that's totally fine. But take the punch without taking the knockout, right? So in that case, if I have a major liquidity level on the hourly chart and the price is dipping down strongly, even more than what I expected, I need to close the position and I need to take that loss. Simply as that. Sometimes it won't be as easy, it's easier said than done, of course, but this is something that if you put, and this is something that helped me a lot, because again, I've been buying the dips or selling the top for many, many years. If you have it in front of your eyes, literally with a page that says, okay, let me ask those questions. Who is the pain? Who is in pain right now? What has already happened? Where do where do I see that I'm wrong? Once I have those three and I can mark it with a checkbox or just write down the answer right next to it, then it's easier for me to commit to that stop loss and take myself out of that position. So these are the main three questions you want to answer to filter out the dip. So let me ask you this. Now that we're watching the chart, one decision, okay? Like I said before, you have three questions. Try to answer this. What is that stage that we're looking at right now on that chart? We're looking at Tesla on a 1 minute chart. Again, when I'm trading stocks, I'm trading mostly on a 1 minute chart. Let me know here, where is that stage? What is that stage? Is it the first one that we talked about, the one that everyone is selling super strong, or is it the hope dip, looking for that bounce, the pullback, or it's actually the expectance of the dip, and then we need to go higher from there. Try to answer in the chat. Don't worry about being wrong on the question or the answer. That's totally fine. Feel free. Let me know what you think. And by the way, yes, for those of you who asked before, this could work definitely for futures and for Forex as well. I can easily tell you I traded three of them throughout the years. I had like 5 months that I only traded Forex. It was great and also profitable, but to be honest, a bit boring. Sorry, so for me, stocks and futures are more exciting, so I got to stick to my guns. But it's the same concept. You will see the drops, you will see, you will understand where the market, where the participants are actually occurring, what's the psychological aspect for each one of them, and then you will need to buy the dip correctly, which will, if we're talking about the technical side of it, it should be around the area of major key levels. So, like I said, the hourly chart, if you trade in a 1 minute or a 4 hour, that could work as well. Okay, you can vote through the poll right now. Feel free to do that. I'm going to vote as well, although I know the answer. In that case, so yeah, wheat could be boring, I guess. Yeah, for sure. But that's good that you will mix between boring and excitement, because at the end of the day, we 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 want to have it boring, so to speak, but also interesting and good for our pocket. So so in that case, I'm going to share it and look at the chart here. Oh, let me do this. Going to remove this. And this is basically the chart that we just looked at. So we had the drop, major drop that started, the selling force, right? The force that's selling right now are actually occurring right here in this drop and the second drop. Then we have the area of the pullback. That's the hope. Everyone expecting or hoping to see the price bouncing up from those levels. And only then, when we dropped and those guys jumped here earlier, only then we actually see the bottoming, and you can buy the dip. And again, it doesn't necessarily needs to be like a specific point, right? You can see it's basically accumulating the position, right? In most cases, it's not going to be just one candle and that's it. We're going up. It's going to be an area, so you can easily buy around it. Just make sure you have your stop losses at the point where you said to yourself, okay, that's it. I'm wrong. I'm going to be out of that trade. Let's see another two examples, and then we can go from there to our exclusive offer of the night. Okay, in this case, another major drop. That's the TQQQ, meaning the Nasdaq, the leveraged ETF of the Nasdaq. Look at the drop here. First selling pressure coming in, right? Then you can see the bounce. That's basically where a lot of the guys are jumping in and saying, that's it, that's the bottom, let's buy the dip. But that's in most cases will be just a pullback, then another drop, and the accumulating the position and changing or shifting the trend. Like I said, you can easily cut it to three phases. So now or today or even tomorrow, when you look at the chart, try to cut it to those three pieces, right? One, the force, the selling pressure, the second, the hope, and then the real buy the dip, the expectance basically. And you can see the same idea here. And from today, you will see it over and over again. And this one is a bit tricky that I want to share with you. Major force coming in, dropping. Then you have the bounce. Here it is, right here, the pullback. Another drop, accumulating. But in this case, you can see that that was a red day completely from beginning till the end. So even if you bought the dip, maybe it took a few partials out, but even if you bought the dip and it didn't work, you need to understand where you're going to exit the trade. As you know, you're never going to get 100% of success rate. But if you go through those three stages, I can assure you, because I saw it for my trading and others as well, you will see a dramatic increase of your success rate, pushing from 65 and even above that. So make sure you have your stop loss, you understand where to exit at least. And of course, those three phases, ask yourself those questions. All righty. Okay, before jumping to our next stage, I want to bring back the man, Saul, Fiverr's CEO. Come right up. Gonna take, yeah, let me remove the share screen. The guys at home, if you can put the guys in the back, if you can put us.
There we go.
All righty. How's
How
it
was
going?
it? Yeah, it was good.
For me, it was great. I hope the guys listened and took some advices. I mean, it's amazing. You know, we've been trading for a while now, and we're doing roughly the same. We do
Yeah.
have the same,
Approach.
yeah, the same approach on the market, right? And even if you're doing forex and I'm doing it on stocks and futures, it's uh, it's amazing to see how the chart will react.
Correct.
Because as we talked about it many times, it's a psychological aspect to the trading, right?
Psychological, and big money looking for bringing money to from a level to another level. So
Incredible.
yeah, it works the same on all markets. So it's fascinating to see and to trade it, and yeah, hopefully you're getting the best insights, guys, there at home. So what are we doing now, Michael?
Okay, it's time to present our exclusive offer. Both of us have it for the Fivers and Trade a Pool. You've been waiting for a long time, so we'll do that. Then we'll go for a quick commercial break, and then right back into our funded interviews or our funded panel where they can share their knowledge about the evaluation and the funded and the payout, everything that you need to know in order to take it to the next level. So let's start with that.
Yeah, let's do it.
All righty.
Let's do it.
So
What we got? I'll take it.
let's start
Okay,
with you. Yeah.
guys, we prepare an account that's going to be available only for a few days until January 2nd. We want to give you the opportunity to prepare yourself for the next year. So as you know, we got at the Fivers a very popular account, which is the two-step, the high stakes account, and there's a lot of demand, a lot of requests for small accounts on the high stakes account. Today the smallest account is the 5K account, and we constantly have questions and requests for smaller accounts than that. So so more traders can get advantage of accessing the market. So we've done that only for you guys. We opened the account for from today. In a couple of minutes, you will see that on your hub available for purchasing, and we also giving it on end of year exclusive price. Okay, this is a price that is not going to be available in the future. So we've opened a 2.5K account, high stakes account, for only $12, which is
Amazing.
Yeah, which is a good opportunity to take for everyone. You can add that account for on top of accounts you already have on your active accounts. You can get up to 4 of these accounts at any given time. So it's a great way for preparing for the next year. A lot of you guys watching there, you're thinking on doing this step into the prop market, or the Fivers or the Forex market, whatever it is. And this is a great opportunity to get an account and get your toes in the water without risking or investing a lot of capital. Just get an account to get prepared, to to practice, to set your levels, everything, to get started for 2026. So 2.5K account, high stakes, for only $12, starting now until January 2nd. You can go to your hubs and you will see that account available up for grabs.
Yeah, that's incredible. So, and of course, a Trade a Pool, we cannot sit aside and just see the Fivers is doing a promotion. So what we are going to do, we do have the 5K account on Trade a Pool. It's bypassing the PDT rules, so you can definitely day trade with the 5K. We're gonna do a big discount, probably the biggest that we ever did, 50% off till the end of the year on the 5K account. So it's practically $29. You can buy a few of those, no limitation on that. Go ahead and do that. And a lot of the times, I've been talking to many traders, interviews, webinar and such, and I'm definitely not recommending to start with the bigger accounts, right?
Absolutely.
Start with the small one, build it, understand that you know the rules, you see that you're making a progress, and only then go for the higher
Absolutely. The same way you would do on your brokerage account, right? You start on a demo, you deposit a little bit of money, you get used to the platform, you get used to the rules, we got the daily limits, we got the risk management guidelines, we got the targets, we got the leverages, all that. So get used to the prop rules and prop environment on a small account. This is the best way of doing that, the best moment of doing that. And then when you experience success, when you experience consistency, only then go and scale your account.